Welcome back. Now, it's been a pretty much mixed picture across the board. Still, some little bit of hope coming through with regards to the stimulus package out of the United States. It seems like talks are continuing. Whether we'll get it before the November 3rd election is perhaps a totally different story. Speaking of the election, before the break, you heard the presidential candidates there making way and making some eminence of where exactly things will lie when it comes to the COVID-19 cases, which have now seen another upsurge in the United States and in Europe. Of course, South Africa getting some sort of rebound as well. Many countries following a similar mountain as well. So a bit of a mixed picture out then in Asia earlier this morning. The Shanghai Composite going down more than 1%. Unfortunately, the negativity there with relation to China has certainly been borne fruit on that front. Japan's core consumer prices, though, slipping for a sixth straight month in a row there, perhaps not necessarily picking up. That economy unable to pick itself up and drive on continuously at this point. So the Nikkei then going down 0.2%. But all of Europe has seemingly gone a little bit higher, so the major indices on that front have all gone up more than 1%, 1.5% higher, in fact, for the FTSE 100 out in London. Positivity as well for the local index, going up 1.2% at present, 55,434 points. One of the big gainers across the day today, the financials, nearly 1.5% to the good, following banks having gone up just around 0.5%. Platinum miners, unfortunately, taking a bit of a hit, and this comes even though Anglo American yesterday made note of how they perhaps see their production continuing to climb back up. Even their platinum and palladium production has seemingly gone back to really good levels. Whether things will get back to pre-pandemic levels very soon, though, is a big question all on its own. But Anglo American really enjoying itself at present and saying, for now, we certainly are back to some sort of normality. Gold miners have managed to go up 1.5% there. Industrials 1.2% to the good there, following some positivity somewhat out in Asia, with resources going up over 1%, of course, coming through from the difference between those gold miners and platinum stocks as well. In terms of companies that have gone higher, Clicks, of course, in the news flow as well yesterday, so it continues to take in some positivity. A massive 12.5% uptick in that share price today, sitting at 254 Rand and 80 cents a share. How much consistency can we perhaps get with regards to that uptick for Clicks then is perhaps a question in mind at present. Roynet has also gone up 6.63%. It's at 34 Rand and 12 cents a share. Old Mutual, of course, the struggles for Old Mutual have been quite severe following the issues that they've had with the CEO. They seem to have perhaps come down a little bit now and seen themselves back into some sort of light, but 10 Rand 80 is still how much the share costs. It is up, however, today, 6.2%, so some positivity out on that front. In terms of the stocks that have gone down today, Fortress, the property company, going down 4.37%. Italtile has also taken a bit of a hit today, more than 3% weaker, in fact. Northern Platinum, following the platinum counters that have gone down there, just 0.9% there. Following all of those is the likes of Northern, which have dipped 2.64%. Another dip as well for RB Platinum, which is 2.5% weaker, still sitting at 66 Rand and 3 cents a share. So a pretty much mixed picture across the board on both of these. Onto the commodity segment then, 0.4% higher for Brent crude. It's still the question around demand. What has happened, though, is that Russia has said that they will actually continue with the supply cuts in the world. So if you decrease the amount of oil in the market, the price goes higher, and that's why you're seeing it go up 0.4% now, sitting at 42 Rand 63 cents a barrel there. Platinum counters, or platinum itself, should I say, the ounce still sitting just below $900 a fine ounce, but it is more than 1% to the good, so seriously enjoying itself there for now, while gold prices have also gone higher, 1/3% to the good there. The local currency weakness, albeit very slightly though, 16 Rand 22 cents against the US dollar. It's 19.22 as well for a euro, and a pound sterling will set you 21 Rand 21 cent. Saki Zanqaga is the director at ZARX and joins us now via video link. Saki, thank you so much for the time. Did that presidential debate between Joe Biden and Donald Trump do anything to shake up the markets? I mean, I can imagine that a lot of the choices are already made. It's now whether about that stimulus action sort of comes into play.
Well, thank you, Arabile. I think more than the debate, people are going to wait until the elections are over to see if there's going to be any real shift in the balance of power. So I think the debate, yes, gives people a sense of what the policy choices are. so that irrespective of who wins, there isn't a sense that there's going to be a massive change one direction or the other. I think during these times, everyone is quite keen on getting some sort of certainty. So I think everything that's coming out of the debates doesn't give any potential investor or markets worry that there's going to be significant policy change post whoever wins or doesn't win elections.
Yeah, still no stimulus deal though out of the United States. Does that shape things a little bit for the market, or is it just a case of it's okay, we'll wait and see what happens after the election?
I think the approach would be a wait and see, because I think the outcome of the election is a lot more important than even what the package is going to be. I think generally Trump has been seen by the market as consistent on business first, economy first. And I think that kind of message will be what people expect is going to carry through post the elections if he happens to win. And I think Biden, having been in the system as well, is a sort of tried and tested hand that is not likely to be seen as a hand that's going to shake the tree too much.
Russia has also said that they're going to continue to supply oil or cut the oil to the markets. They're still following through, still feeling like demand is weak across the globe. Do you think this is a good move? I mean, the price has gone slightly higher, but not too much really to write home about.
Well, I think it's a very rational decision for both Saudi and Russia to push. Because if they push too much supply in the market, the price is going to go down. They may have higher volumes as a result, but I think both of them are looking for a better margin than they're looking for volumes. They're better off with lower volumes and a better margin. And I think oil above $40 is what they can live with. It's not as good as it used to be before, but I think $40 is sort of the minimum mark that both countries appear to be looking at. So I think it's a very rational economic choice by both countries where they are chasing margin over volume.
All right, so interesting on there. Let's get into some company news. Clicks coming out with some numbers out yesterday. I mean, one of the largest dispensers really, and chemists as well in the country, seems a business that will continue to fare well. Do you see that happening still for the future? I mean, post-COVID-19 even?
I think it will, Arabile. If you remember, I mean, Clicks is one of those businesses that didn't close even under the hard lockdown because they're offering essential goods. So I think, what, if anything has happened about Corona is that it's brought us back to what is essential. I think people are a lot more conscious about their health. I think their results going up is telling us where people are putting their priorities. And I think that's going to continue for some time. People are going to prioritize hygiene. They're going to prioritize taking multivitamins, eating healthy. But also in terms of appliances, as people are working more and more at home, they're going to be wanting things that are making their homes convenient. So I think even if we look at Clicks, there's been some interesting trends. I mean, not only are their volumes promising, but there's been a significant shift into online sales. So people are going less and less into shops. They're preferring convenience. They buy in bulk and, stay at home. They're buying closer and they're buying online. I mean, their online sales have grown by more than 360%. So those, I think, are some of the trends that are just giving us a sense of where the economy is going and what maybe even other businesses need to do to sort of stay alive. So I think there are pockets of the economy that are going to remain resilient because they just are essential goods which we need in the market.
Yeah, so important for those elements to just keep on going. Very quickly as well, Anglo American has said that their operations look to be getting back on track. That's a good news sign for the market, isn't it?
No, it is. They also are saying quarter on quarter, on average, I think they've increased production by 24%. They're almost at full production at about 95% of their capacity. So that, again, is a good indication that at least people are being fully utilized or almost fully utilized. Because if the operations in any of these businesses are not going, it then means people are either being paid for doing nothing or they run a risk of retrenchment. So having big entities like Anglo almost back at production and it not leading to massive infections where at least we hope they are being a little bit serious in managing health risks. But we hope again that some of these measures will help into the future, because again, health and safety in mines has been an issue over time, but also socio-economic conditions. So you hope that this is a time where, conditions of mine workers are also going to improve. But it's a really good sign to see a mine as big as Anglo at about 95% of their capacity currently.
Yeah. All right. Saki, appreciate the time this afternoon. Thank you so much for chatting to us here on SABC News. Saki Zamgaga is the director then at ZARX, helping us unpack this market picture on this Friday afternoon. Look, that's where we'll close things off. Yes, some positivity on the board behind us, but where to from here? Look, we're looking forward towards the finance minister's medium-term budget policy statement. That's happening on Thursday next week. That'll happen right here then on SABC News. We'll have you all that coverage as well then across the day, and give you some insights into what to expect and what not to expect as well. My colleagues Naledi Matlapeng, Diabo Seto and Nastasia Arensa are coming through right after the short ad break, though, to give you some insight into how to invest your money and how to make best as an SME as well in this country, while also taking a look at the best books to read at this time. All that and a whole lot more coming up at the top of the hour as well. My colleagues will take you through some more news headlines. Have a good weekend from here at the Johannesburg Stock Exchange and the team. That's where the buck stops.